In this lesson we're going to be talking about the accounting equation. This is again basic information, and it forms really the essence of most of what we do in a course like Accounting 201 as it relates to bookkeeping and accounting. Accounting equation is referred to as an equation because it's always shown in the format of an equation. So let me explain. The amounts on the left side of the equation will always be equal to all of the amounts on the right side of the equation. Now let me explain what each of these letters stand for. The A on the left side stands for assets. Assets of a, and again we're always talking in terms of a business organization or a business entity. The assets of an entity are things that the entity owns. Those things generally have some value in terms of the existence and operations of the entity or of the organization. And that value for any asset is primarily tied to its ability to help the organization generate income. So some examples of business assets would be cash. Almost every, if not every organization is going to have some amount of cash on hand on a regular basis. Some other examples of assets in a typical business organization would be accounts receivable. Accounts receivable are amounts owed to us if we're the business. There are amounts owed to us from our credit customers. If we make a sale, we can make that sale in exchange for cash, or we can make a credit sale. If we make a credit sale, we're not going to receive cash at the time of the transaction. We're going to be receiving a promise from our customer to pay us that amount later. And we would record that on our books as an account receivable, or an account to be received by us at a later date. Some other examples of assets would be inventories. You could have a supplies inventory, supplies that are used on a regular basis throughout the month as you move forward in your business operation. You could have merchandise inventory. If the business is a merchandiser, that is a business that buys a product to resell to customers, buys from suppliers or vendors to resell to its customers, then that business is generally referred to as a merchandising business, or it's a merchandiser. Merchandise inventory would be an asset on that business's books and records. Some other assets would include trucks and automobiles, equipment, machinery, furnishings or furniture. You could have things, we could have buildings or even land, all recorded as assets on the books of a business. And again, what is an asset? An asset is something that the business owns. It has some value to the business, and that value is generally, or should be at least, translated into its ability to help the business generate income. Because after all, and again, you know, we're talking about for-profit businesses, we're not talking about non-profits or not-for-profit organizations generally. We're talking about for-profit businesses. Businesses are usually in existence to sell either services or a product, or both, at a profit. Okay, so assets are on the left side of the accounting equation. Now as we move over to the right side, we get into some other categories of accounts, basically. So we have our asset accounts. As we move to the right, the L stands for liabilities. A liability is, in more common terms, usually called a debt. And a liability is basically something, an amount that we owe. So we own assets, we owe liabilities. And generally, our liabilities are owed to our creditors. And those creditors are basically individuals or organizations that we buy from on credit. Just as we can sell to our customers on credit, we can also buy from our vendors or suppliers on credit. And so that account, by the way, would be called an account payable, an amount to be paid at a later date, or an amount owed that will be paid to our creditor at a later date, account payable. Some other examples of liabilities would be perhaps our bank or credit union from which we have borrowed money, and so we may have a note payable to that bank or to that credit union for a loan that we have taken out. Again, moving back to the left, assets on the left always equal to the total of liabilities. And then over to the right from liabilities is owner's equity. And I'm going to come back to owner's equity and talk about that last in this discussion. As we move forward to the right from owner's equity, we have this R, and the R represents our revenues. What is a revenue? Well, a revenue is, in more common terminology, a revenue is our income. The income that we generate as a part of the reason for our existence as a business. Now, we generally generate income or revenues through the exchange of product or services for money in the form of cash. Cash is the actual terminology we use for that asset. We don't call that asset money, we actually call it cash. So when we make a sale, we're going to generate revenue, and the exchange is generally going to be a product or services that we are providing to our customer in exchange for cash from our customer. That is how we earn our income or our revenue, through that exchange. Keeping in mind that if we are not making a cash sale, we could very well be making a sale on credit, in which case we will not end up with the asset cash, we would end up with the asset accounts receivable. So again, revenues are our income. We earn our income through the exchange process of our providing goods or services to our customers in exchange for either cash or their promise to pay us at a later time, which would be part of a credit sale. Then finally, on the far right of the accounting equation is the E, and the E stands for expenses. Another more common term for an expense is probably cost. our costs, just as our revenue or income is earned through the exchange process between us and our customers, our costs are incurred. That's just terminology. Revenues are earned, costs and expenses are incurred by us as the business. And we incur an expense, again through an exchange, but this exchange is not between us and our customers. This exchange is generally between us and our suppliers or vendors, or organizations or individuals that are providing us with goods or services that we are purchasing.